Welcome to Currency Watch. This is Chris Keene from Keene FX. As has become the usual case, it was a slow day of trading in New York today. There were a bit of fireworks in early trading after the ECB decided to keep interest rates steady and suggested that maybe future monetary policy would not be the solution to their current crisis. This caused the majors to rally against the dollar, but this was short-lived as most of these moves were faded in later North American trading. The big news on the back burner is the non-farm payroll report that is due out tomorrow. The report is estimated to come in at 160,000 jobs created. If this number is missed to the low side, we could see a counterintuitive reaction, but a rally in risk and a rally of the euro, pound, and so forth, because this miss would suggest that maybe further quantitative easing would be in the cards for the U.S. government. Now, if the number comes in better than expectations, you could feel that the dollar would strengthen off this, but you're never sure that how the market's going to react to a non-farm payroll number. And the best thing to do is to wait for the dust to settle to see how things are going to play out. There are a few pairs that are going to be affected by this non-farm payroll report and actually news that could come out in Asian and European trading. The first pair we're going to look at, as usual, is the Euro USD. The Euro USD has been trading in this narrowing triangle for the last few months. As we can see, the top is a long-term yearly support, and down here we have a weekly trend line. If the pair breaks through this triangle after the release of non-farm payrolls, we could see, if it breaks down through support on the low side, we could see a move down to the 130 area. Now this is a long-term, actually monthly price support. If we break this, the pair could move down aggressively over the next few weeks. Now on the top side, if we get a break of the 132.75 resistance level, we could see a move up into the 133.80 level in the next few trading days. But I would expect that any move to the top side would be capped by this 132.75 price and trend line resistance level, because I mean that would be 130, 140 pips away. And the next pair of interest is the pound USD. After breaking out of the wedge that contained the pair for the last few weeks, it hasn't really done too much. It's drifted down slowly, and it has established itself below the 162 area, but it has been trading in a narrow range, basically between 162 and 161.50. After the recent non-farm payroll, we could get a pop higher to 163. Now, if the pair can break through 163 and the long-term trend line resistance level, that would be a change of trend, and we could see a move higher. If the pair breaks lower, we could see initially a move down to support at 160.75. What you need to keep in mind with the euro and the pound, that it is the beginning of the month, and so far the pairs have been moving down in the month of May. So this could be another sign of indication of a change of trend. Now the next pair that everybody's been watching so far this week is New Zealand USD. As you can see, the pair basically was in an extremely tight trading range for the last 2 months. Going into the last day or so, the pair has broken down, and it broke through the bottom of the trading range at 80.60. It is now testing 80, and is exactly at 80 as of time of this recording. Now, if the pair holds here, can gain some traction, we could see a move back up into the trading range, or it could simply go up to 80.60 and then bounce back down. If the pair doesn't hold at 80, we could get a move down to the 50 fib from the move from last November. That comes in at 79.21, and we also have daily price support down at 79. So if the pair does break, I would look for support at the 50 fib. If we get a hold here, we could get a move back up into the trading range or a rejection at 80.60. Now, the other pair of interest, similar to New Zealand, is the Aussie USD. As you can see, it is testing the bottom of the range that it's been contained in over the last month. Now, the bottom of the range comes in at 102.50 and 102.25. If it can break through this, that would be a trend shift, but that would also mean that it would be a risk-off environment, and the euro, the pound, New Zealand, all pairs, CAD would be going up, but those pairs would be going down. As you can see, the pair briefly tested the range in New York trading today. Now, we have to keep in mind that going into tonight, there is the statement of monetary policy coming out of Australia. This could push the pair one way, up or down, based on the results of the report. Now, if we get a push through with the 102.50, 102.25 zone prior to non-farms payroll, that could cause a measured move to happen quickly because of liquidity in the markets. Now, if we get a hold of this zone tomorrow, we could get another move up to 103.50. If we break down through this level, we could have a measured move heading back towards parity. The last pair of interest is the USD CAD. As you can see, the CAD has been moving down over the last week or so, and it has been following this trend line lower. Heading into the close of New York today, it is pressing up against that trend line, which comes in basically at 0.9885. Based on risk sentiment this evening, we could get a breakthrough that, and we could see a test of 99 followed by 99.50. But if we get another hold here, we could see another move down to 0.98. So the levels to keep in mind are the trend line and 0.99 and 0.98. Now, I wouldn't expect there to be a lot of action in tonight's trading, where most traders will remain sidelined, waiting for the release of the non-farm payroll report. So I would keep your eyes open for any opportunities, but as always, keep your trades keen and play it safe. This is Currency Watch. Welcome to Currency Watch. This is Chris Keen from Keen FX. It was another quiet day of trading in New York. There were a bit of fireworks after the European Central Bank kept interest rates at the current level, but they hinted that future monetary policy won't be the answer to Europe's current debt issues. This caused the euro and most of the majors to rally against the dollar, but these moves were mostly faded in late New York trading. Heading into tonight, all eyes are going to be on the non-farm payroll report tomorrow. This report is expected to come in around 160,000. If the report beats expectations, this could create dollar strength. If the report misses expectation, this could cause the dollar to fall against most of the majors because of future expectations of further quantitative easing. Let's look at a few pairs that could be affected by this. The first is the Euro USD. As you can see, the euro has been in a tight triangle for the last month or so, 2 months or so, and the triangle is narrowing. The top of the triangle comes in around 132.75 and the bottom comes in around 130.60. If the pair gets a boost from the Fed announcement, we could see, the non-farm payroll announcement, we could see a move back up to the top of the triangle in the range of 132.75. If the pair moves down, we could see it move down to a test of the 130.60 level, and then ultimately the bottom of the larger range at 130. This level would be key support for the pair, and a break of this could indicate a trend shift lower. The next pair of interest going into tomorrow, or actually tonight, is the New Zealand USD. As you can see, the pair is broken out of the tight consolidation that it has been following over the last month or so. It broke through 80.60 last night in Asian trading, and it moved down to 80 today in New York. If the pair can hold at 80, we could get a push back to the 81 level and then ultimately back into the range. If the pair falls back through 80, we could see a move down to the 50 fib from the move up in November around 79.20, and we also have strong support around at 79. So the 79.20, 79 zone could create a strong support zone. The next pair of interest is the Aussie USD. As you can see, the Aussie USD has moved down once again to test the support range between 102.50 and 102.25. It looks like it has moved up quite a little bit since testing as low as 102.39. Heading into tonight, you have to keep in mind that the Aussie statement of monetary policy is going to be released. This could influence trading. If we get a break of 102.50, 102.25 zone, we could see a quick move down because of lack of liquidity heading into non-farm payrolls. If the pair bounces up higher, we could get a move back up into the 103.50 area. Another pair of interest is the USD CAD. As you can see, it's been riding this trend line lower for the last 2 weeks. It's pushing up right against that trend line, and if the pair can break through this trend line and move up to the 0.990 area and break through, we could see a move up to 99.50. If the trend line rejects, we could get another move down to 98. The last pair I want to look at is the Great Britain Pound USD. As you can see, it broke through the ascending wedge that had contained it over the last few weeks. It has moved down and broke through the 62 level, but really it has just been consolidating between 62 and 161.50. The report tomorrow will probably shake it out of this range. If we get a break higher, we could initially test 163, and 163 is a strong level because it has a trend line just above it that is a yearly trend line that has contained the pair. If we get a break above this, we could see a trend shift higher. Now, if the pair breaks lower, we could get a move down to 160.75, and in the long term, if we get a move back down to the bottom of this triangle, we could get a trend shift lower. Now, heading into tonight's trading, I would expect the markets to be rather quiet. So I would look for your trades carefully, but I wouldn't jump into anything really on a whim. Now, as always, keep your trades safe and play it keen. This is Currency Watch.